What's up, guys? I'm back again with my day trading recap for February 14th, 2023. Today, like always, I traded SPY, SPY. If you were trading today, you saw that CPI data came out, especially with how our current economy is going. The inflation consumer price index is pretty much a gauge of the inflation, is a big numbers that always come out for us. If you traded today, it was a pretty exciting day, but also kind of boring at the same time. On big data days like this, it's fun to get a trend, but if we kind of zoom out, I mean, there's no trend. That's about as flat as you get, and we closed at 412.83 yesterday, and we closed at 412.64, a 19-cent day. Insane. In fairness, we did have a decent range from 408.5 all the way up to 415. And so with that, I did take a couple trades. You'll see here. This 405 put was that swing from yesterday. I was correct that CPI was going to come in hot, just not nearly as much as I thought. I could have cut him. I should have cut him earlier. I was down 140. At one point, I was down about 60 on him, and I could have cut him. They were kind of like lottos for me. It is what it is. Obviously, it hurts to see. In hindsight, I should have taken profits, especially when we opened at 411. I mean, 405 puts. Do I really think we're going to drop 6 points in a day with data as almost flat as that? It's like, no. It'd been easy to kind of see that, get as much reach down as I could, and then stop. My next trade was a 410 put. If we pull up this at 435 and 450, so I entered here and at the 50 mark at the VWAP, I'm following my new trading plan. I have a $50 hard stop per trade. You can see that it's 91, which is pretty annoying for me. It was me putting in the sell order, not an actual stop loss, which on a day-to-day, I guess I should have had a stop loss in, because when I close this thing out, if I pull up a minute chart really quick, I might be able to show it. I close this thing out, let's see, I'll give you 41 and 42. So I closed this thing out on this candle, actually, and because it moved so fast, I think I was looking at 320, and that was my sell. By the time I'd click sell, it had already moved to 3, so I lost an extra 20 per contract. I had 2 contracts there. So, I mean, it hurt a little, but it is what it is. I did dig myself out of quite a bit of a hole. With my trading plan, though, I sized back. I sized back dramatically. So on this call and this put, I sized back dramatically, and I only add to winners. In all honesty, it probably is a pretty good game plan. All the time is only add to winners, but I do allow myself a 1 or 2 average downs generally, just depending on my conviction on the trade. But for the call, my call was my next play, and thankfully, I find myself getting stuck in having a biases way too much, but here I didn't. I immediately cut those. 2 minutes later, I grabbed some calls, and I was able to rip those up. I did get stopped out for about a little less than $100 profit, but in all honesty, it's not a bad thing that I got stopped out. I mean, you can see this, and that if I had held on, it would have been a nightmare. But that was a nice $280. So right there, I mean, I did that dug myself out of quite the hole, and I'm very pleased with that one. Then once we got up to here, I then actually played puts. This was all in the span of, entered and exit all of these in 20 minutes of the market being open, and grabbed puts at what time did I grab this? 8:46. No, that's not right. Either way, I grabbed puts and rode this train down a little bit. Same deal, though. These ones I got stopped out as well. I think I got stopped out on this tick up, and they could have come down for a little more. Granted, the trend was in our favor. What I really didn't want to happen is for me to lose a sizable chunk of this green day. I dug myself out of a $230 hole, and I was very pleased with that, and I wanted to keep as much green as I could. My last trade was just a bad trade. Right here was when I think Hawkins was talking. Either way, he had said something about how their numbers, or one of the Fed members was talking, and we liked that. What I really was watching was this 1367. I added on this candle, it was one contract, and I got high on the IV because of this move we had just seen, which is a bit unfortunate, but I got high on that IV, and I mean, this pressure that was building here. In hindsight, what the better move would have been would either have been a VWAP test, so this entry, or wait for a break of 1370 with confirmation. Which in either of those senses, I mean, none of this would have really counted as a whole lot of confirmation. I could have rode, the 80 to the 70, but that's less than $1 move. And so that one I got stopped out for a $50 loss. I'm pleased with that, though. I took my hard loss. It was pretty much on this wick. I could have had a slightly less loss, slightly smaller loss, but it doesn't really matter. I followed my trading plan. I actually wish I'd kept that loss a little smaller, but this candle, because of that move, just jolted it so quickly that I just wanted to get out. I wanted to take away my green day because I didn't want to lose. Well, I didn't want to lose a $200 day, but that $50 was my hard limit. I was willing to lose $50 on it, and that was about it. So I followed my trading plan quite well across the board. I find myself when I come back for lunch, I need to stop taking these lunchtime trades. I'm 0 for 2 so far in this week, and they've lost me, $100-some, and there's no point. I mean, that wasn't anything great. In reality, this bounce off the 409 area would have been good, and I was watching that a little bit pre-market, and that would have been a good trade, but nothing here. There's way too much chop. And then the IV, because it was I actually did have next day expiration, but still, because of that move, that IV got bumped, and then we just chopped for a good hour and a half. So the IV just got destroyed, and then a big wick like that just took those contract price down aggressively. So that was kind of my long day of trading. Good and bad, definitely lessons to be learned. Overall, I'm pleased with it, and it's easy to say that because I came away green. But overall, with my two biggest trades, I did follow my game plan. Even my loser. These 3 trades here are my main trades. That, if I had a hard stop, it would have followed my plan better. I could have saved myself $40. But each of these, I kept them small. I only added as they were winning. I took profits somewhat early and left a runner to go so that I could get some more green. But I wasn't willing to risk more because I was starting the day red, and I had to keep that in mind. In reality, I want to keep my max loss to $50 on a day in total. And so that's why I was very, very picky with these plays. But they worked out. I guess in hindsight, had they not, I don't know what I would have done. I would have had to call it, especially after 2 losing trades. In reality, whether I would have called it or not, that's why we work on the psychological game of trading and the mental aspect of it. As for tomorrow, I don't really know. We never broke past, and see, now we're back below. It's a little hard to see this trend line. And obviously the trend line's not exact. It's just the one that I have on my chart, and I like how it touches. I like how it touches on the 4 hourly. And so, I mean, 2 wicks above, both bodies close below. I really think with the data coming out, the Fed's overall sentiment, and the fact that one of the Fed members says this is going to take years to get down to 2% inflation, with our interest rate easily going above 5, I think we're coming down a bit tomorrow, and red is good days to make money because, as you know, we take the escalator up or the stairs up and the elevator down. I mean, you can see it there. Granted, that was also a big day, but with a body like that, it is green, but we closed 19 cents. Actually, that's not true. We closed 19 cents from that close and about 30 cents from that high, and so. We'll see where we open up. The next thing, the bigger thing that I'll be watching then is where we open on SPX. And if we open below 4,100, then that will be key. I would really like to see, and I've said this numerous times because we've hung around this area for a couple days now, I'd really like us open below 4,100, come up, test it, and reject to either a 40-50 or if something bad comes out, 4,000 overall. But I really like those put plays off of open below a key level, come up and test it, and then reject. And so that's really what my main watch will be. And I kind of, for the fact of it being, besides being red day, I kind of hope we see that. Otherwise, to the upside, if we break that trend line I had going, if we break that, then I'll really be watching, especially on SPX, the 4150. After that, I mean, our next key level is 4,200. So if we can break this trend line, I really, really like our upside to 4,200. But with everything that's going on, I just feel more bearish. So I would like to see an open below 4150, but ideally below 4100, touch and reject down to the 4050 area. And that's really where I'll be my main watch for tomorrow. But that's all I have for you guys today. Remember, trade smart, trade safe, and always make sure that you trade to live, live to trade another day.